Welcome to this video on presumptive income calculator. What is the presumptive income scheme? The presumptive income scheme under section 44AD, 44ADA and 44AE of the Income Tax 1961 allows eligible small businesses, professionals and freelancers to pay taxes on a fixed percentage of their gross receipts or gross turnover rather than maintaining detailed books of accounts, because maintaining books of accounts is a full-time job and you need to hire an accountant or a tax consultant. For professionals such as freelancers, this might pose a challenge due to the small and medium nature of their business, and they might not be able to hire a full-time accountant. So this particular scheme helps them to avoid hiring a full-time accountant, and also ensures that they can streamline their tax process, reduce compliance burdens, pay taxes effectively, and be profitable at the same time. So this scheme is especially beneficial for those whose gross receipts do not exceed 50 lakh in a financial year. Now let's see the advantages of the presumptive income scheme for freelancers. Simplified accounting, so there is no need for complex bookkeeping or hiring an accountant for detailed records, because only financial basic details are required, such as the receipts in terms of cash or in terms of electronic mode, so like say checks or online transfers. Only these details will be required to arrive at your gross receipts for in terms of cash and digital mode. No other details are required, and it's a very presumable, predictable tax liability, because only a portion of your income, total income, is considered as an income presumptively. Like presumption is much like assumption. You assume that this much of your income is taken as the income for calculation. So you save time, because there is no complicated calculation, there is no complicated bookkeeping, and predictable tax liability means that you can always plan your taxes in advance. So your profit, your revenue, profit and taxation burden is properly aligned with each other, and hence you don't have any advance tax hassles too, because under the presumptive income scheme you can pay your tax liability by 15 March of the financial year, so you need not pay any quarterly advance tax payments. And despite you paying the entire tax liability just before 15 days before the end of the financial year, there is no penalties. Let's head on to our free presumptive income calculator to calculate your presumptive income under section 44AD, 44ADA and 44AE. Section 44AD is for general businesses such as say grocery stores and stationery stores and so on. And section 44AD is for professionals, whereas there are prescribed list of professions that are covered under 44ADA, such as legal, medical, engineering. So legal means lawyers, and medical doctors, engineers, architects, accountants, technical consultancy such as in terms of providing knowledge on certain chemicals, or helping someone to complete their project plans and so on. That comes under technical consultancy. Interior decoration is another allied field, and other notified professions which the income tax department notifies from time to time. All right. Now let us go ahead with the uh, tax calculation. Right. Select the assessment year, select the assessment date, and then enter the gross receipts in terms of cash receipts. So you get the effective presumptive income as only 1000. Although the total is 14,000, presumptive income is only 1000 because it's 8,000 into 8% for cash receipts. For digital receipts it is 6%, so 6,000 into 6%, and then that's how the total comes as 1000. So the 640 here, and 360 here, which is 1000. Now let's assume that under the business gross turnover for section 44 ADA it is 10,000, and it is presumptive income for section 44 ADA is 50% of the gross, which is 5,000. Now in general you can also report a fixed percentage of your a certain percentage of your turnover as you need, but the presumed portion is only 50%. So as you can see, this is the effective of 60 because we selected 60%. So 10,000 60% into 60% is 6,000, but only 50% is considered for presumptive taxation to come up with your tax liability, and hence it is 5,000, as you can see here. For any questions, you can always contact us through the links provided on the home page or on the about us page. Let's head on to section 44A, which helps the small or medium transport business operators, such as vehicles or um, goods, or goods carriers and goods loaders, uh, transporters, to determine their tax liability. And they have vehicles which they can operate for certain number of months, like all year or just a portion of the year, like say 8 months out of 12 months, and those details can be then entered through this particular UI. So let's say vehicle gross tonnage, number of tons is say 5 and number of months is 8. Enter the vehicle registration number, which is important to identify which vehicle it was. Let's say now the vehicle tonnage is 13. Now 13 is more than 12, which means it's a heavy vehicle, and for heavy vehicle the charges are different. So for heavy vehicle, it is the vehicle tonnage into the number of months into 1000. That is the calculation. So which means in this case 13 into 8 is 104, into 1000 is 104,000, which is 1,04,000. And for light vehicles, it is this vehicle with the tonnage of 5, it's only 5 tons, so it's a lightweight vehicle. And because it's less than 12, and the number of months is 8. So in this case, the tonnage is not considered, but the number of months into fixed income of 7,500 per month, which means 7,500 into 8 is 60,000. So the whole total of the vehicles, two vehicles, is 1,64,000, which is 1,04,000 plus the 60,000 for lightweight. So as you can see here, we get some calculation here, like the total is the 1,000 plus the 5,000 at 6,000, 5,000 for the section 44 ADA presumptive, and 1,000 for section 4480 presumptive portion. We can always check and uncheck the presumptive portion of income. Here it is checked by default, but if you uncheck, the calculation will be different, and then the presumptive portion is not taken, but the whole portion is taken instead of presumptive. So, but let's do the calculation for presumptive because that's the default calculation formula. In, utilized by the income tax department. So we get the 1,64,000 plus 5,000 of the 44 ADA and 1,000 of the presumptive income of the 44 AD section, which is 6 and 6,000 and 1,64,000, which is 170, which is correct here. And then right now the taxes are 0, but if we keep on adding a little bit to this particular section 44 AE and add the vehicle registration number details and everything, so definitely the section 44 AE income will be more than more now, which is now 20 into 8. Recently we added this vehicle. 20 into 8 is 160, and 1,60,000 is added to this earlier income, and which becomes 3,24,000. And the 6,000 for 44 ADA plus 44 AD, which it calculates as correctly as 3,30,000. And the net tax payable is 1,560. 1,500 is the tax payable, and and thus we come up with the rebate and cess. Right, the cess is 60, so this is the whole calculation. So the net tax payable is 1,500 because the tax payable is 1,500 on which cess of 4% is applied, which is 1,560, and then thus the net tax payable. This this gives a certain understanding of the calculation that is done. So this is a diagram which will effectively describe how the calculation is made, and this is a description of all that is under the provisions. Please note that this is a representative calculation, and this is not a substitute for professional advice. You can always get in touch with us for any professional advice through our chartered accountants and tax consultants. And so this is how the whole flow is, and this will give you a understanding of your taxation. You can always do a export to a PDF of the whole calculation, which looks like this. So it has correctly calculated the total taxable income presumptive under section 44 AD, 44 ADI, 44 AE for transport operators, and the tax calculation is thus this much, and then the tax payable before rebate, after applying rebate, and then applying the cess as 60. Thus the total tax payable is 1,560 rupees. So this gives you a very quick calculation. You can share this PDF with your tax consultant, with your CA, or with your finance team, and they can help you to pay the taxes, or they can review this thing. As I said earlier, you can always contact us through the means available on the home page and in the on the about us page, and you can contact us via email or phone. Thank you very much for watching this video, and I hope you enjoyed this video, and it gives you a certain solace in understanding the complexities of the section 44 AD, section 44 ADA, and section 44 AE. Please go through the blogs that we have provided and also the how-to videos, and you can always go through FAQs, and finally contact us for any of your taxation needs. Thank you very much.